What is a P&L? Why do you need one? And how do you read one? If you spent any time reading or watching stuff on business finances, you probably have heard the term P&L a lot. You might know that it stands for profit and loss, and you might even be able to create a P&L report. But do you actually know how to read your P&L statement? A report isn't very useful if it's just a collection of meaningless numbers, and a P&L can definitely be confusing if you've never pulled or studied one before. In this video, I'm going to walk you through a real P&L step by step. You'll understand how to read the super important document and understand what it tells you about your business. Plus, we'll cover another one of my favorite reports, the cash summary. Dare I say that it's better than a profit and loss report? So grab a mug of coffee or a cup of tea and pull your latest P&L so you can follow along. Ready? Let's go. All right, now we are looking at an actual real profit and loss statement, or it might be called an income statement. Those two are synonymous. This is of a client of ours. It is completely anonymous. I obviously renamed it to really cool client. I also changed some of the numbers so that this really is anonymous and just an example that we're looking at. So I'm actually going to move my face up here. That way we can see this whole thing. But a profit and loss has revenue up top, also might be called income. I like calling it revenue. Cost of goods sold, if you have those are directly related to the revenue that you bring in. So for this brand and web designer, she hires out the copywriting and also hires out the web design. Then we've got operating expenses or overhead expenses, they might be called. And then the very bottom line, this is the most important thing that you need to know in your business, is profit, or it might be called net income. If you are in zero, you can actually change these names, which I need to do because I actually really love those terms. So that is kind of the flow of a profit and loss. So we're first going to talk about revenue. And you can see that I have run this profit and loss by month. That is so much more helpful than just looking at a total column. We really want to see month over month how your business has performed. So the first thing that we're going to do is just look in total at which service offering you have that has brought you the most money. We always break out service offerings by income stream. So you're not just going to see sales right here. We really want to break out what was brand plus web, what was just brand, what was just website design. And you can see that those are her three biggest, brand web copywriting is the third highest, website design, and then brand and web was her highest, biggest bread and butter offering that she has. So we're really going to see which one of these is the highest. Then the next thing that we're going to do with revenue is to just look at where you had your highest revenue. You can see that December, October, and April, March were some of her highest revenue months. Why did that happen? What was the true reasoning behind getting more clients or more revenue during that month? Then we also want to look at revenue by quarter. So you can see right here for Q1 of 2022, she had 63,000. How does this compare to Q2? Sorry, that was Q1. Q2 right here is 65,000. Q3 is 44,000 and Q4 is 64,000. How do those compare to each other? Which was the highest and why did that happen? Then what gets even more fun is when you start collecting data year over year. So we can actually do this in the software where you're comparing the current year to what happened in a previous year. And that is so much fun to see the percentage growth or even the percentage decrease if that's intentional year over year. Another great reason that we really like to see revenue broken out by offer is if there's something that's really just not lighting you up. It wasn't this client, but I did have another client where she just wasn't making very much on collateral design work, which is basically offering like a PDF or designing something else that's different from the brand and plus web. And she just didn't love it. It wasn't lighting her up and she wasn't getting much revenue from it either. So when she actually saw that, the cold hard data, she was like, you know what? I think I'm going to take that off of my list of service offerings and just do it as like a VIP half day only with people who I've done their brand design before. That is such a huge win. The fact that she saw that and made that decision and that switch in her business was a huge win for her. Next, we're going to look at expenses. So right here, we actually have cost of goods sold. And you can see that I did a little calculation right here to say, what is the gross profit, which is total revenue minus direct client work expenses or direct expenses to your revenue. And she has about a gross profit of 179,000, which if we're dividing this by this, that's about 75%. That is a very high gross profit. I usually like to see gross profit, not net profit down here. That's a different thing. I usually like to see this one like 40 to 60%. But this one up here, I do like to see somewhere between like 60 to 70. So she's even higher than I would normally think. So she's doing great as far as gross profit. She's collecting all of the income from her clients. She's contracting out to different copywriters and web designers. And she still has a great overall gross profit margin that she can use to pay for all of her overhead expenses, which are down here. So when we're looking at expenses, you can see for some of these, they have notes like she tried to use a marketing company, realized it wasn't working for her, and then cut back that expense and didn't have it in November and December. So increased her profitability those months after trying out something new. But when we're looking at expenses, we really want to see where are the biggest expenses. So her biggest month was right here. Yep, in October, where she was trying something new. She was contracting out her social media management, all of her marketing management, and it was just a really high expense for her. And it ended up not working, which is fine. You might say, I really want to keep this big investment. It's working for me. I jive well with their team, with the contractor. And it ends up bringing you more revenue because you have more visibility, more clients, etc. But for her, just wasn't working totally fine. And she ended up increasing her profitability by cutting the expense instead of by increasing revenue. So those are two ways to increase your profitability is increase revenue or decrease expenses. So we're just really looking for big expenses. Did we have a return on investment for them? Anywhere that we can cut back, always look at your software subscriptions. If there's anything that you're not using or you can switch to an annual plan to save money, do it. So that's another reason why your profit and loss is so great to be looking at and knowing how to read this. Then the most important thing on this profit and loss statement is the profit. Revenue minus expenses equals profit. This is going to dictate exactly what you can pay yourself, how much you can pay off on your credit card, how much you can save in your business if you're saving for a big investment or for time off in your business so you can still have that cash to lean on when you take time off. This number, this profit number, is the one thing that you need to be paying attention to on this report. All right, now we're going to take a look at an actual cash summary. If you have been around this YouTube channel or watched any of my other videos, chances are I have mentioned a cash summary. And you're like, Madison, what the heck is that? I barely even know what a P&L is. This report is just gold. And I think it's so much more telling than a P&L. So it includes everything that is on a profit and loss report. This is all of the same revenue that we were just looking at. And then we have all of the same expenses that we were just looking at. It's not grouped pretty, or at least this report isn't. We totally could customize it if we wanted to, but it's the numbers that we really want to see right here. So we have either a surplus or a deficit. You can see every single month she was profitable, except for this month right here, not profitable by $500. Then we also have the actual credit card on here. So this is a combination of paying off the credit card or the credit card actually increasing in balance. Then we also have changes in equity. And that sounds like a weird foreign, like accounting jargon word. Totally get it. But this is also cash out the door. She paid estimated tax payments. She paid herself throughout the year. She also pulled out some money to buy a plot of land and a house. Yay, her. So these are also things that are cash out the door as well that will never show up on a profit and loss report. Then what we're left over with is the net cash flows. So this is taking into account all the money coming in, money going out, credit card payments going out, all of the owner's draws, personal expenses, estimated taxes going out as well. And this is what we're left over with. December was kind of a crazy month because she did have this one coming out, but you can clearly see that month over month, these net cash flows are mostly positive. She has 1, 2, 3 that are negative, where she is leaning on the cash reserves or dipping into the cash reserves that she has built up over time. I get so jazzed when I look at this. If you can't tell, this report simply lights me up. I think it is so telling of the cash position of where you are in your business. You can clearly see your opening balance for the month, all of your net cash flows up and down, all of the other things that are not going to be on a cash report, and the ending closing balance that you have in cash. And have you been leaning on cash? If this is consistently negative, where you've had a really high cash balance, then you're just leaning on that and really dipping into it every single month, that's going to tell you that you have to increase your profitability by increasing your revenue or decreasing your expenses. Whew, this is all such good stuff. Wow, that was so much information, but I really hope that you truly understand how to read a P&L report, how to read a cash summary, and what that means for your business in increasing profitability. We may not always want to make six figures or be a millionaire, but we do want to have increased profitability so that we can pay ourselves well, pay our team members well, and continue the longevity of our business. So as a reminder, a P&L will always cover your revenue, expenses, and profits. A cash summary will include those as well, plus your credit card payments, your owner's draws, estimated tax payments, and anything else that are changes in equity. The easiest way to pull these reports is with a software, although I'm sure you could totally find a way to do this in a spreadsheet. Don't want to use a software or a spreadsheet to do your books? Hire me. We create these types of reports all the time and we customize them for you. We can help you monitor that profit and loss and increase profitability. I would love to hop on a call with you. The link to book is below. See y'all next time.